So if you have an investor from fill in the blank country, then their rules are the rules that you need to abide by. Setting up your fund. We're going to talk about the fund setup roadmap, okay? So step one, preliminary work that you do. So you have your market research on your asset, your category. We talked about the reports, all the different things. Like, you want to gather as much macro data around what it is that you want to do, even though you don't know if you need it yet. And the reason why you want that data is because you want the statistics, you want the data points, you want to be able to substantiate the category, the asset class, the market that you're investing in. So Mel has a really good slide in his pitch deck about the golden horseshoe in the context of the total volume of freight that drives, the trucks, the logistics. I don't remember anymore, but you got a lot of really compelling stuff in there that really edifies why that golden horseshoe is so paramount to the economic viability of effectively North America, right? And all this stuff. So you guys want to get that data in the context of what you're doing, because at a very broad level, it positions what you're doing in that it frames it properly. So you can speak to, in some ways, maybe the size of the market that you're addressing. Drafting a business plan, we don't call it a business plan in the investment world. We call it a CIM, a Confidential Information Memorandum, which is effectively a investment thesis version of a business plan. We call them CIMs. I know a Confidential Information Memorandum in the real estate world is like a offering package, but in the investment world, it's the financialized version of your of your business plan, effectively, is what it is. Part two is your legal and your regulatory framework. So here's a fun one. You have to pick, if you're Canadian, you have to pick which province you want to follow as your house rules. I call them house rules, because Canada doesn't have a unified regulatory system for securities. Every province is slightly different. You need to find a lawyer that you want to have, not as your corporate lawyer, but as your securities lawyer. And typically it's a good idea to have a lawyer in the province that you intend to find most of your investors. That's a good rule of thumb. Doesn't mean all of your investors will be from there, but generally if you plan on raising money from Canadians in Ontario, well, you should probably have an Ontario securities lawyer. I've heard many lawyers agree with that, some don't care, many do. That's a good starting point. Drafting your documents. So there's all kinds of documents that you're going to need. You got subscription agreements, risk acknowledgements, partnership agreements, you got shareholder agreements. Sometimes there's a good rule of thumb. My understanding is that you have to follow the securities laws of where the investor is from. Not for where the project is, but where the investor is from. So if you have an investor from fill in the blank country, then their rules are the rules that you need to abide by. Don't add too much complexity. Unless this is someone that you're dead set, yes, I need them involved because of X, Y, Z. In my experience, all of the sexy things overseas that I went and chased, a lot of them I was just spinning my tail in my early days. Just for whatever that's worth to you guys. I would have been far better off if I just stuck to my 1-2 punch here in Canada. I would have been far better off, because these Hail Marys that went and chased once in a while were just nothing but bills and grievances for me. So I'm not saying it won't work for you. I'm just saying that that should be your second or your third act, not your starting point. You can have a project in Texas, like I do. You can be living in Ontario, where your corporation is registered, and you have an investor from British Columbia. You have to abide by the British Columbia securities rules because you're raising money from them in BC. So that's another thing, is if you're finding a securities lawyer, make sure they're flexible to work with you in all the provinces that you may have investors. A lot of them will tell you no, because they won't want to deal with the outside, because they haven't done that and they don't want to learn, usually. Step three is your operational setup. So banking relationships, you have to have meetings with banks. We teach you how to talk to bankers. You think it's simple, it is not. Most bankers have never seen fund documents. They have never seen them. And unless you're already wealthy and you have a private banker, you're going to have to go through the retail commercial banking channel. I will guide you through that, because that's what I've had to do when I first started out. You don't have a private banker when you're typically building your first fund. So, if you have a private banker, they'll go fight the battle for you internally. If you're new, you need to go figure it out. And we've done that once or twice, so I'll show you how to do that. The banking relationships are important. Service providers, so if you're doing RSPs, you need trust companies. Maybe you're choosing to go raise capital through securities dealers like exempt market dealers or portfolio managers. There's certain integrations, there's certain softwares, there's certain things they expect you to know before you say hello. And if you're not on certain platforms with certain data feeds, you're dead to them because they have no way to pull data from you to do their required reporting, and that's a big part of it too. So there's all kinds of different things that you can graduate towards over a period of time depending on where you're at today. Not all of it has to happen today, but at least being aware is important. Key personnel, so you may choose to hire somebody to help you with the administration. When you're building out your model, that's where you budget for salaries or staff or admin fees or some of the things we talked about earlier today. Step 4, marketing investor relations. So now you're at a point, you're probably a month into things at this point with the lawyers, with the accountants, with everybody who's involved, and you've now firmed up a lot of the technical things within your business, and now it's time to make things shiny. You got to make things pretty. You got to make things look good for the investors that are potentially going to consider your opportunity. So by now, you've worked out your $1,000 sheet of paper, for lack of a better word. You have your packaging of the technical things. Now you make things pretty. You figure out how to put everything together in a data room. So you actually build out a data set for your investors. So if you have to have a data set, you have to be able to send Arlette something or your potential investor in a certain way. We teach you how to build that as well, the data rooms, because there's different levels of sophistication for one. Like if Tom and Kush are telling me they're going to a PE firm, okay, if you're going to be pitching to a PE firm, this is the kind of data set you probably want to build. Hey, we're going after $250,000 investors at a time that are doctors. Okay, great. Like, don't misunderstand. There's certain documents that are legally required that you have to provide everybody, regardless. But then there's additional color that will be more pertinent for somebody who's maybe a physician that they're going to want to see from this perspective as opposed to somebody who's an institutional investor. They're just going to want to see different things. Subscription process, so that's where you work out your SOPs on when you accept funds from investors. So how do you accept it? Because here's what will happen. Lawyer just sent you all the sub-docs and they're like, here you go, fill this shit out, right? Have your clients fill this out. And you're like, but wait, but which order, but which document? How about, right? So that you had to create an SOP for your subscription process. And it's first time around, you don't know what these documents mean, let alone which ones, who signs what. So you got to create the SOPs for your subscription documents. And then number 5 is you do what's called a soft launch. So just before you're about to firm up all your documents, you go and talk to, as Arlette mentioned, you go and talk to some of the people that you think are going to be your biggest supporters. And you say, hey, look, I'm just about to firm this up. This isn't done. This isn't finished. Like, you can't invest with me yet, but I'm looking at structuring this fund this way. What do you think? What are your thoughts? Because at that point, they'll send it to lawyers, maybe review it, their lawyer, maybe their lawyer has some comments. They always have comments, right? Like, it's fine. But maybe they'll catch things that are good. Maybe they'll catch things that actually make it a better offer. Maybe there was some boilerplate language in the document that you missed and your lawyer missed, and you're like, well, I didn't intend for that. Great, it gives them an opportunity to flush that out. So that's a soft launch. And then you'll also figure out your soft commitments. You'll figure out what the potential appetite is of the community. You'll know where you stand with your potential investors. Soft launch doesn't mean you're going on social media and promoting. You don't have an offer. Like, it doesn't exist yet. You're just going to your immediate circle of people that you know, like, and trust that would support you, and you're getting their perspective on things at this point. You're not running around and doing webinars and events, and you're literally just getting perspective from people that are close. That's what I would do. Then you firm up your documents, you do a hard launch plan, you create your investor management process, and at this point, you're running around and typically raising cash. Now, from step 5 to 6, typically happens after you've acquired your first or your next asset. So you learn lots between 0 and 5 million, or 0 and 10 million. You learn a lot about the actual process, like a lot. Because ultimately what ends up happening is all your assumptions get tested. You figure out if the share structure works, if everything works. You have your discussions with the accountants, the auditors, and you're rolling, you're scaling. At that point, you're now thinking about how do you scale this thing to the next step. And that's a really important piece.